Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for the weekend ending Sunday, November 26, 2023. Hope everybody had a safe, happy, wonderful, family-driven Thanksgiving holiday. This is my favorite weekend of the year. It's Thanksgiving on Thursday, it's shopping on Friday, and it's off in Michigan, Ohio State on Saturday, and then Sunday it's recovery day. I am a Michigan grad and true blue when it comes to Michigan sports, so you know who I'm rooting for. I'm actually getting this out hopefully on the 25th, but I always have the date as Sunday. Again, Jeffrey Scott is my name. hgsidoc@gmail.com is my email address. I welcome comments, criticisms, questions about anything I talk about. Happy to respond. Keep your criticisms, please, constructive. Some of the ones I get are kind of funny, but constructive is always good because I could always improve. I've been doing this for a long time, but I'm always looking to get better at my presentations. I title this A Pause to Refresh or Something More Ominous on the Horizon. As I listen to a lot of pundits on TV, on Twitter, and so many people are calling for a pullback here, and there's good reason for that. We've had a big run. We're getting extended. I'll show you some signs of that. And then if you look at long-term trend lines, we're at really a critical area. That doesn't mean we're pulling back. In fact, if everybody says we're pulling back, maybe we're not going to pull back. But let's take a look at the markets and let you come to your own conclusion based upon the way I like to do it, which is looking at data. As always, this is for educational purposes only. Anything I recommend should be taken in the spirit of education and not considered investment advice. I am a doctor, not a broker. I have an MD. I've got fellowships, residencies, and internships, but I have none of those fancy Series 7s and 65s and other things that I would need to have to be approved to give you investment advice. I'm independent. I've paid for the tools that I use and the tools that have been developed for me. And trading involves risk, and you alone are solely responsible for any investment decisions you make. If you like these videos, I try and post as frequently as possible on stocksanddocs.com a short video that usually I do either late night or early in the morning, and then the folks at the site will post it for me before the market opens, typically 5 to 8 minutes of what I'm looking at that session. My source for getting this data, at least these charts, is HGSI, and it looks at 5 days. This was a 3.5-day week, so it's not true to say that this 5-day column represents the week, but I do like to always look at 5 days at a comparative performance. And you can see what we've got going on in the markets. Yellow are the major market indices. You could see Friday was a strong or a positive day for many of them. Dow was up 0.4, S&P was up a little bit, 0.1. The big winner was the Russell, again 0.7, NYSE 0.5. So the broader indexes were up, but not everything. NASDAQ Qs were down a teeny bit, as was the NASDAQ Composite. So, but Friday is a low volume day. It's the day after Thanksgiving, not a day that you make most of. And if you look at over the last 5 days, things have been positive in the markets. If you look at the sectors over the last 5 days, and I think it was the same for the 3.5 days, all the S&P sectors were up. Now this tool here is called the Q-Edge tool. This uses Refinitiv data, so most people don't have that. I like it because it gives me a real-time heads-up view of what the market is doing. Up on the top, it tells me that on Friday, again, holiday, shortened day, low volume, so take everything about Friday with a grain of salt. All sectors were up, 84% of industry groups were up, and 75% of stocks were up. Now, if you watch that during the day and you see that the indices are down and the breadth is positive, that might give you conviction to take some longs. On the other hand, if you're watching that during the day and those are all red and the indices are green, that tells you that market's probably going to lose some steam. We can see that real time, which would have been Friday's results on this picture, all the sectors were up, On Thursday, 10 out of 11 were up. Again, if you look at the past 5 days, which is more than just this past week, all the sectors, 89% of industry groups and 74% of stocks. Now, the breadth was much better than the indices because we'll look at the indice performance over the 3.5 days. But it was a positive week, no matter how you chop it. Here's another Q tool. This is called Market Breadth. And this is a composite that includes the NASDAQ, the NYSE, the Russell 2000, the S&P 500, the NASDAQ 100, and the Dow. And it allows me to put them all together and get a sense of what the market is doing. This green line here is my 13-week new high, new low, the one that's the T2121 in Warden. And when it gets up to these two lines here, it starts to get into rare air, and you expect the markets to stall, pull back. You don't expect them to keep going higher. Now, you could argue that with these doji days, pretty much, really, if you go back here, 1, 2, 3, 4, 6 out of 7 days look like doji. So we are stalling here, and I will show you some good reason for that. But we are getting a little bit on the overbought side here. But there has not yet been any distribution. The red dots would be distribution on the particular industries. If we look at the Nick Drendel's tool, which again is another thing that I like to keep up during the day, email them. It's like 45 bucks. It doesn't require a separate data source. I look at a few things here. Actually, I look at a lot, but first thing I might look at is change for the day, and you can see it was a quiet day on Friday, a good day, especially for small caps, up 0.7. I think we talked about ARKK was up 1.26. The IWO small cap growth was up 0.65. So you could see there was some strength. We finished in the top part of the range. I like to see that. If we looked at the major averages compared to the 50 positive, look at how much ARKK has moved up above its 50 and its 200. Keep in mind that it has been depressed for quite some time. Here, new high, new lows. If we look over the 1 month, we actually had a very positive day on Friday, despite the quiet day of new highs versus new lows. And if we look at over 52 weeks, we're positive as well. So you don't expect to see markets do well unless the new high, new lows are going up, favoring the new highs. And we're seeing that. And that's something to put into the column of the bulls if you think this market's going higher. Another thing I like on this report is you can look at, it's limited, just the sector ETFs, industry group ETFs that he puts in here. But these are the big growth ones, and you can see China, biotech were up at the top. And I've been talking about biotech for a while. You can see over the last 20 days it's been up 11.3. And this thing has been dead, biotech, for so long. If this market's going to rally or continue to rally, I'm expecting biotech to move with it. Rates held steady on a holiday shortened week. You could see the 10-year was up 0.7%, just 0.31. The 30-year was up even less. There just was a quiet week for everybody, for everything. It's going to change this week. Again, the question about recession, you'll hear about the yield curve inversion. The zero line is the black line here, and you could see that every time the 10 minus 2 on the left, 10 minus 3 on the right dips below that zero line, you get a gray band. The gray band is a recession, so based upon this, we should have one. Down in the lower left is credit tightness. There is none being seen in the market, nothing remarkable. And then the Philadelphia Fed Diffusion Index got above the minus 20. Well, it's below minus 20 that you start to see those gray bars. So I think it's a mixed question. That's why I say every week, I can guarantee you we have a recession coming because we always will, but no one knows when it's coming. And remember what we have next year. We have a presidential election. We have every House of Representatives seat will be up for grabs, and we have plenty of Senate seats. I think there'll be fiscal attempts to avoid a recession in a major election year by the party and the people in charge. Why? Because they want to get reelected, and recessions are bad for being reelected. Here's that T2121 right up here, and you can, well, you have to look hard to see it, but whenever it approaches this overbought level, excuse me, this should not say oversold. Sometimes I don't remember to change things, so let me see if I can't fix that real quick because I don't like to have something sitting here that's that off. Bought. Perfect. Do that and do this. All right. So you can see that it's approaching the overbought line. The reason why it reverses this line is because the markets pull back. The yellow being the S&P, the white being the T2121. If you look at stocks above the 200, stocks above the 400, they're getting into nice areas as well, but it's not an extreme as it is on the 2121. So based upon this picture here, I would expect at the minimum a pause to refresh this coming week. The buckets, very bullish, but not crazy. 85% of the stocks are above the midline. 85% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands. That's extremely bullish. But so few of them are above them that it's not so overbought that we need a reversal. If we look at the Hindenburg omens, of course we're not going to see one here. But what I wanted to show you is on the NYSE, we're building the new highs, 52-week new highs, and on the NASDAQ, we are building the new highs, although we still have these new lows sticking around. Much more bullish than it's been. Now, this is a simple curve where I take what's called the ERG from last week, and the ERG would have been on the ending on 11/16, 17, which was Friday rather. What was all the fundamentals of the different stocks? I use a $2 and 250,000 share cutoff for the stocks that I look at. And I asked the question, how did performance relate to ERG? ERG being a combination EPS plus relative strength plus group ranks, 0 to 99 for each of them. That means your max can be about 297. You take out the head and the tail because you can see in gray line the number of stocks here is very small. And you can see it's relatively flat with a bit of a performance suggestion that it was better to have higher growth, which is the kind of thing that I like since I'm a growth stock investor. But notice for the most part the returns were muted. You could see here as earnings went up to a point, returns went up. Higher relative strength, higher returns. Now, if you're a growth stock investor, a relative strength follower, an IBD type of an investor, then you like to see a curve which starts in the lower left and runs to the upper right. And, you know, not a perfect curve because it's not tilted even more, but it is a positive curve for growth stocks. Now, part of my concerns for this week is that it seems that when the market seems to be doing well, the Fed tries to talk it back. And all they have to say are things like higher for longer, no cuts on the horizon, and we still will raise if we have to. Well, notice on the left all these arrows. I try to capture the majority of the Fed speakers. Sometimes I miss one or two. And that culminates with Powell talking a couple times on Friday. So I don't really think the Fed speakers are going to get up there and say, we're cutting, or this is great, the market should go higher. I think they're going to do things that are going to try and tame the market. So I think we have to keep that in mind. Lots of news this week. Consumer confidence, GDP, Beige Book, jobless claims, the PCE complex, manufacturing, auto sales. So there is a lot of news this week. And if you look at the right, you'll see a lot of earnings. There's some big retail names. Seadrill was actually one of the charts that I liked, but it's got earnings on Monday after the close. I hardly ever buy something the day of earnings until after earnings come out. Some of the big software names, Snowflake, Salesforce, OKTA, companies that we use within my company at Integra. some retail, some banks. So you've got a very busy week of earnings. Bad judgment call to hold stocks. It is a judgment call, not a bad judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. And finishing the didactic PowerPoint part, another winning week for the majors. Broad-based sectors were all up. Again, um, you did see, and we'll show you, a drop in the market early in the week because of concern that the Fed would raise rates again. Again, this could be reinforced by talking Fed heads. Next week, lots of economic data, lots of earnings. Now, I'm going to show you that my simple market timing system went to buys for all major market indices as the IWM closed above the weekly 30. As I showed you, short-term breadth with the T2121, it's gotten stretched, but the momentum seems to want to go higher, although pause to refresh on the short term would be healthy for the markets. And again, just to remind you, Stocks and Docs, love to have you come check that out. All right, so I wanted to start with these long-term charts with some trend lines. And this is a chart that on each of the indices that I typically follow, and I follow the spiders, the Qs, the diamonds, and the Russell. On each of these, if you go back to their highs before the bear market and you run a trend line from the high to this was the run up in July and then the current high, you'll notice that the spider is right up against trend line resistance. Now, I don't think it's that shocking that it started to, and this is a daily chart, that it started to stall up here. So this is a risky area, but it's a risk to both ways. If you look at the Qs actually gapped up and broke right through that trend line resistance. Now, perhaps that trend line will come support and may support the Qs outperforming as we go forward here. If we look down in the lower right at the diamonds, it looks a lot like the spiders. As you could see, we can always adjust these a little bit. High in the market, here we have those August 1st highs, and we are right under that trend line. So again, an area that you expect hesitation, some pausing, could be resistance. So 2 out of the 3 are going into that. The Qs are obviously doing much better. And then the one that's lagging, even though it's been leading the last couple of weeks, has been the Russell. Let's see if I can bring most of that in here. And you can see it's well below that trend line. So if you take a deep look back, you got two things that are very important. You got the spider up against long-term trendline resistance. You got the diamonds at trendline resistance. I think that's the stake in the ground that I'll be watching, because a break above it would be very powerful for the markets. Because wouldn't it be nice if we break above and then have a little retest and run from there and close the year at yearly highs? It's not out of the question, but a little bit of hesitation, a little reaction at this trend lines would not be a surprise. Now, as I mentioned earlier, my weekly market timing signals have gone to a positive across. So let's go ahead and let's go to shapes, objects, and we got a new buy on this bar here. If you open up the data bar, excuse me, you could see that the 30 period WMA is at 179.25 and we closed at 179.33. So that makes 4 out of 4 stocks or major market ETFs the same as we looked at just a minute ago, where price is above the 30 period, and this is weekly charts, WMA. The bongo, which is a single, which is weekly, is green, and that's my timing signal. So all of the markets are in buys, although tepidly on the Russell. But the Russell's been the fastest, or the strongest one of late. So it's hard for me to be bearish when I see this. Does it mean the markets rocket from here? No, I've got to respect those trend lines, but it makes me want to believe that after some initial hesitation, we might blast on through them. If we go and we look at the indexes, and let's just start with the 5-minute spider. So here's last week, and you can see last week, Thursday and then Friday were super strong sessions. And again, that's why that 5-day return in the beginning is going to be skewed higher. On Monday, a little bit of a head fake down. And then, if I remember correctly, the first bar, let's get this. Yeah, we opened a little bit below where we had closed, and then we closed higher on that bar, and we ran up the entire session on Monday. Tuesday, we had some of those fears about rates and the economy, and the market pulled back at the opening, went sideways, and then Wednesday, gap up, met the highs early in the session, and then through Friday, really the market traded sideways. And as I pointed before, we're right up against what could be formidable resistance, and it was a low volume holiday period. If we look at the daily spiders, you could see coming into this trend line here, we are a bunch of dojis, 3 here. Break above this would be incredible. Of course, the volume is going to be low. Something that a lot of people were talking about, let's just change this one to a weekly maybe, is that we actually have gone positive on the MACD on the weekly chart as well. So cautiously optimistic, but not so crazy to believe that we can't pull back here, hence the title. So spiders in an interesting position. I think we beat that dog to death. The Qs, which we've shown you, have already broken out, and you know what, they're kind of going a little bit of consolidation here, which is great as well, as long as they hold above this yellow line. The diamonds, like the spiders, are up at an important piece, and frankly, they've had a big run, as you can see. Let's bring the spiders back. The Russell, well below that trend line, below the anchor VWAP at the high, below their 200, above their 50, and until proven otherwise, the Russell's in a consolidation between the 200 and the 50. The VIX at the lowest it's been in a long time. I don't think the VIX was updated yet, but you could see the UVXY. You don't see a lower one on this chart. Now, when the VIX is low, look out below, which is one of the old things that my buddy George Lee, may rest in peace, liked to say. And this VIX has not been much lower in forever. It may be ever, but for quite some time. And then if you want to look at something supportive of the market going higher, as the dollar continues to be weak, and a weak dollar is certainly one of the main drivers, I believe, of the rally that we've seen. If we go jump and look at commodities, gold did run up with the weak dollar, and you can see gold is, maybe it's going to flag up here. Silver, stronger day than gold on Friday, but was behind, but also strong session of 2.77. Oil consolidating here right above the 200. Oil hit just when you can't think, natural gas can get worse, but natural gas hit a recent low. One thing that would go against the bulls is that the 10-year actually gapped up a little bit, was up 1.27% on Friday, but with the low volume day and holiday day, I think I'll wait and see what happens this coming week. Talked about the market timing signals. I like to look at the TLT versus the spider. And why? Because if we were having a recession, one would expect to see that this thing was going to would jump. It hasn't. That's nice to see. I like to look at the broader indices versus the majors, and you could see that on both the spiders and the Qs, although the dominant trend still supports the larger cap stocks, the spider and the Qs versus the RSP and the QQQEs. Short term, it looks like it's broadening out. When I look at the hourly sectors, let's see if I need to change anything. Um, Now it looks like the strength remains in technology. Strength remains in FANGs. That hasn't changed over the last couple of weeks. Um, I could probably keep redrawing this, but it looks to me like biotech is making its move. It's taken out what's been a descending trend line. For those that are new to me, these are ratio charts of the various S&P 500 sector ETFs in a ratio chart versus the spiders. That sort of neutralizes the number. I'm looking for things that are in the upper right hand corner, which are the strength of the market. I'm looking for blue bars like this showing that staples were strong on Friday. Not a big change. Then I go into the stock scanners, and the first thing I'm going to look at is going to be heat map on the S&P 500, and one could see that some of the leaders lagged on Friday. Now, every program has its, and I don't want to say quirks because quirks is a negative connotations, but every program has its specific peculiarities. And one of them is this program, Wealth Charts, will include after hours on the heat map. Well, there wasn't much after hours on a holiday shortened week, but you could see that the large cap, the FANGs technologies lagged on the day, but there was a lot of strength. And again, the S&P on Friday was up a few pennies, 0.06%. So next I look at the wealth scanner, which is one of my favorite tools in wealth charts. This ranks whatever you put in there and will bring the ones that have the highest wealth score up to the top. And I often joke that this is like their version of relative strength. Look at XLF and the run that XLF has had. And that is interesting because financials have not been leaders. But if you look at what's working right now, you got XLF, KIE Insurance, ARKK, Hack, so two cybersecurity with bugs, diamonds, value stocks, fintech, internet growth, aerospace, USA quality factors, whatever that is, industrials, and now you start to drop below. So one thing that's happened over the last 10 days is the market has strengthened, and we see that with so many instruments trading above 800 and several at the 850 level. This look a little weaker than it did perhaps on Monday, but you do see strength in the market. And so now the last part is if we're cautiously bullish. Now that's caution. I'm not looking to go big on Monday. I want to let the market define what's going to do. And Monday could be an interesting day. It might be the first day you have volume in a week. And remember all those talking heads this week in the PCE complex. So I'm going to be cautious. I want to see what happens at that trend line. I'd love to see a break above it because I like to be bullish. So let's go into the scanner. So I've built a scanner that helps me find the type of stock I like to trade. Now, the stock that I like to trade is a stock that has been in an uptrend, has pulled back to support, and is breaking out and getting ready to run again. I like it to have several of my signals, which I call my dots. I like it to have relative strength greater than the market. I like it to have volume. And I prefer ones that don't have a ton of overhead supply. So the first thing I do is I run my pullbacks and uptrend scans against all symbols. But since we already saw that financials and real estate were doing well, let's take a look at financials. And let's see if anything comes to the top here. BKE Holdings. Don't know anything about it, and I don't like it already. Well, I don't. Not to say it's not going to do okay, because look at this weekly. This thing's very choppy, and although it's getting ready to break out, it's still below the 200, so I would skip that. Arch ACGL is one that I do like. Now this one's had a nice run. Um, it didn't have a lot of my dots this week. Relative strength and OBV are lagging, but this is one that's been a leader, and I'd be looking for this thing to break out. It hasn't, but I'm not seeing a lot of dops on financials. Do I have insurance? I do. On the insurance, there's the Arch Capital again, the one we just talked about. MetLife, got to get above this level, not Prudential. None of these look that exciting to me. Okay, well, let's then go to a broader base and let's look at my what I call my combo leaders list. Now, a lot of people ask me where that comes from. So let me show you where that comes from. Oh, let me find it. I hate the word anal, but I guess you could say when it comes to my trading, I am sometimes a little bit anal. So I do a number of scans in TradeStation. So a lot of these come from my John Person and other scans that I do on a regular basis. Now this has now been built into wealth charts, which makes my life even easier. So I have a number of scans I follow. Some of them are Q, some of them are John Person that I run in TradeStation. In HGSI, I build a number of watch lists, a lot of different scans from there. And then from IBD50 and MarketSmith, I download a lot of lists of of leaders, and I basically turn these lists into a text file, then I import them into a mega list. Well, that mega list gets pruned a little bit, and that mega list actually becomes my combo leaders list. So to make it into the combo leaders list, you have to have made it to one of these published lists or one of my favorite scans that I like to run for us to be there. So if I look at this combo leaders list, let's first start by looking for pullbacks. So the first thing I'm looking at here is we've got one 4 dot, one 3 dot, a couple of 2 dots. That's unusually light. Now, but it wasn't a bad week. So how could it be unusually light when it was a good week? And the answer is we're probably not in a pullback market anymore. We've had a big run. We showed you the S&P and the diamonds are about to break through long-term resistance, hopefully, if you're long. We showed you that the Qs have already broken through, and the only laggard is the Russell. So anything that we find perhaps on a pullback scan is going to be a laggard. So I have to keep that in mind because I don't like laggards. So let's look at iRobot. I believe this was on an earnings move, but you could see a stock that's been in a long-term downtrend. And the only reason I would consider this stock, because it doesn't have an uptrend pullback, is because of the amount of move here. This is what's called, Morales and Catcher would call a BGU or a Bible gap up. Look at massive volume. Here's the gap, closed at the high of the session, breakout momentum. Look at relative strength and OBV versus a moving average. This stock really looks great. Now, after a move like that, you really expect it to have a little bit of some hesitation. So I would be careful, but if the broader markets are strong, I would probably put iRobot on a watch list. The Chinese education stocks, sometimes I wish I didn't know the names or what the stocks were, because I remember when years ago China said they were going to go after these companies and stop funding them, and they cratered and became penny stocks. But they're running again. Take a look at EDU, for example. Well, TAL is one that meets my criteria. Is it in an uptrend? Absolutely. Has it recently pulled back? Shallow, but yes. Did it break out on volume? Absolutely. Breakout momentum, volume, coming out of squeeze, relative strength, and OBV. So I like TAL. ASC is a shipper. Now, there's probably better looking shippers, but there are a number of shippers that made it to my list. This one's been going sideways for a long time. Yep, pullback in an uptrend, but boy, it's been sideways for a long time. BEKE we already looked at. Frontier is another shipper. Well, that's a pretty nice looking chart compared to the other, isn't it? Is it the best buy point? No, the best buy point's probably down in here when it broke out before. But that's one I might be watching. SFL, I think this is Ship Finance Corporation, another shipper. Run up, sideways move, and breaking out. That looks interesting. Here's that Arch Capital. Here's an old name, ASO, Academy Sports. Now, the problem with Academy Sports is that overhead supply. You got a lot of people who are underwater. And these people who are underwater might be saying, if it only gets back to my buy point, I'm going to sell. And that's part of what hurts some of these stocks on their way up. Best Buy, they didn't have great numbers, but they didn't scare the street either. This was their earnings day, and you could see their initial reaction was lower. Don't like the 200. I don't like all the overhead supply, so I probably would not be chasing Best Buy. Baidu, again, downtrend, beautiful performance of late. I don't like the 200 up there, overhead supply. I can find better stocks. And then before I move on, I'll look at a couple more. CPRX, this is a stock, a biotech, small pharma, specialty pharma, that it looks to me like it might be getting ready to, if it has not yet broken above its 200-day moving average. This is in that sweet spot where a company goes from a developmental company to starting to selling drugs. And then you'll start to see the earnings go up pretty quick. And when those earnings go up quick, sometimes they'll pull price with. So this might be one to watch, CPRX. And then EC, there were a couple of international integrated oils that looked interesting to me. Uptrend, yeah, just look at the weekly. Breaking out here, yep, not a lot of dots, but relative strength in OBV. So are any of these 5+ buys? No. Maybe TAL is probably the closest to it. But there are some stocks here that I just found. Now, if I don't see a lot of pullbacks and uptrends, then I have to ask, do I just not have uptrends? So I can look at what I call my bottom poppers. Nope, there's not a lot of these. Bottom poppers will be something that's way off the highs. It doesn't require a Bongo Weekly to be green. The Bongo Weekly is my longer term trend line. So things like Axosome. Now, it's a biotech. A lot of these are biotech. I expect biotech to turn around soon. Maybe it's turning around already, and maybe this will become a leader again. But I have a hard time buying stocks in downtrends that are below their moving averages. Marinus is another similar story. Could be the bottom. You could certainly argue it's at a place where it's reversed before in the past. But boy, it's got a lot of resistance to go through before it gets to new highs. ESTC, this is a growth stock that recently sold off. I'm looking for a reason to buy. I don't see it there. MLCO, a Chinese casino. Again, is this the new low and it's going to go up from here? It's certainly possible, but these aren't the kind of stocks I want to buy either. Although some of the biotechs, I have to admit, are kind of interesting to me. All right, so how about rockets? Stocks markets move so far that it's too late to get in. Well, there are some here. HOLI, automation company in I believe the automobile industry. This is a beautiful chart, and I look at the high-low jump at 100, and that gets me a little bit nervous. But this is when you wanted to buy it. You had 4 dots here. Could have bought it the next day. A beautiful run up since that point. It's extended, and that bothers me. TAL, I already told you I liked it. But TAL is also extended if you look at the high-low jump. One thing about bull markets, extended stocks can get even more extended. Anything else that popped in here? Yeah, here's a recent one. This is a stock that is a fallen angel. I mean, this is a stock that Just ask my buddy Simon, my mini-me at work, one of the, hopefully my replacement, take over my job so I can retire before too long. Um, he's waiting for his firm to come back. Well, the good news, Simon, is your firm is one of the better looking charts in the market right now. The problem is it's well off its $176 high, still at 26. This is a stock that I think a lot of people are playing. Another one that's kind of like it to me, a former high flyer that was dead for a while. I actually took a position in this a week ago, is Stone and Company or Stone Co. Limited. I think this is like a Latin American financial play, but getting extended. These are the types of growth stocks that have been working. Here's that Arch Capital again. CBOE we've looked at several times. It's pretty obvious why. This one we called out on this day right here. What a beautiful uptrend. But where is it going to let me in? I look for a pullback before I go in. EC we looked at. The uranium stocks continue to look interesting. And this is a global uranium ETF. I've got nothing wrong with that, although I'd rather buy it at pullback. And then, but again, look here, 1, 4, 1, 3, some 2s, and everything is a 1. There's not a lot of action there. And then lastly, Momo up. And these are just going to pull up the momentum stocks. They may look like crapola in every other way, but on Friday they had a lot of momentum. Well, let's just look at the scan here. DDD, 3D Systems, one of the 3D printing companies. Get your little 3D printer, buy your little plastic, and then make your little toys. Although a lot of people use it for things like in the automobile industry, the aerospace industry, there's a lot of non-toys you can make as well. Triple D, 4 dots. So that meant it had a gap on volume, a breakout of momentum. The Bongo Daily is bullish. That means short term it's in an uptrend. The Bongo Weekly just reversed. So it was in a downtrend and just turned up on a higher time frame. I like that. High-low jump -5. It's been in a downtrend. It's nowhere extended. And let's take a look at DDD. Is this the kind of stock that I typically buy? No, it's not. But maybe it's something I should be looking at here. Why? You got 4 dots, a gap, volume, breakout momentum. You can see your daily and your weekly are both green. Your relative strength and your OBV flipped above their moving average. Again, is this a 4-star flashing buy? No, but this is what's working right now. And maybe this is a rotation into some of those laggard growth stocks. It has a cousin. It's called Stratasys. Cousin looks similar, but not as good, as not broken above the 50. So this way I've looked at pullbacks, I've looked at bottom fishing, I've looked at rockets, and I'm looking at stocks that have momentum. And what you'll see here, maybe it's just indicative of being a holiday week where there was not a lot of movement. There's just not a lot of movement here. DDD, Holly we looked at, iRobot we looked at, BMA looks like a bank, International Bank, TAL we looked at, Vista is an energy, a smaller cap energy play that 3 dots, relative strength and OBV, and looks like it's ready to break out. So there are some stocks there that look interesting. Now, if growth is going to start to work, which gosh, nothing would make me happier, then I might want to start looking at my growth stock list. So I have a list I call Dr. J or JAS high relative strength stocks, and these are leaders that have good relative strength. So if you are a MarketSmith, IBD kind of trader, these are the types of stocks that you might be looking at. So we already looked at Holly. We already looked at TAL. EHang, I don't like this pattern. It's all over the place. I also think I think Muddy Waters is going after a short seller. Frontier is a shipper we looked at. Here's that Arch Capital, which shows up on a lot of these lists. That probably tells you there's something to pay attention to. Abercrombie and Fitch, their earnings were not great, but no one cared. Look at that reversal day, and it keeps going higher. Aspen Aero Angels, another nice run. Just where do you get in? I'm looking for the pullback. Now, the interesting thing with Aspen is look at where it actually came from. And now it's one of these fallen angels. CCJ is probably the best known of the uranium plays. And notice what these high relative strength stocks have. They're pointing up to that upper right-hand corner. These are the big growth stock leaders. Coinbase. Here's one coming off of had a great IPO and then never really recovered, but it's running. CrowdStrike. Well, we know that from the Wealth Scanner that a number of the stocks, and we'll just go back here. If we looked at Wealth Scanner, here you could see you got hack and bug. Cybersecurity is strong. So CyberStrike has broken out. Now, is it at a good buy point? It's running already, is my concern. Datadog, big buyable gap up here, and it keeps running. Elf, beaten up beauty stock, broke up above the 50. We already looked at Elastic. IoT, Internet of Things is what I'd call it. Samsara, one of the growth stock darlings, might be looking for this to start to run. And then let me just finish on a couple of stocks that I think a lot of people are looking at because of their ties to Bitcoin. MicroStrategy is an interesting play for Bitcoin. It's an interesting play because it's more than just a Bitcoin miner or aggregator. And this company has a software platform as well. But this company's been accumulating Bitcoin for years. And it's up because Bitcoin is rallying. If this Bitcoin rally has much further to go, then MicroStrategy will be very interesting. A miner is MARA, which will be the one we end up with. And this one is broken out above the 200. This would be a much less expensive way to play Bitcoin. It's one that I've started to nibble on. And then another one that is in the same world is Riot, similar pattern, and HUT. Has not broken out yet. So some interesting things on Bitcoin. So let me just try and summarize my thoughts. I think going into this week, for me personally, this is the most important set of charts I have. I think we are at a decision time. Based upon that 2121, based upon what I'm seeing in the market, it would not surprise me to see us pause here. It would surprise me to see a big pullback here. And it would not surprise me after maybe hesitating for a few days or longer for us to break through this trend line on both the S&P 500 and the Dow. If we do that scenario, then I expect us to go into January on a bull run. And that's what I'm hoping for. But short term, I think we get a little bit of pause to refresh. I think we see that in the charts, that we didn't have that many charts jumping out and slapping me in the face. Again, part of that's because of the low volume and the relatively flat end of the week. So again, happy holidays. Hope your Thanksgiving was great. Hope you had a great year in the market. It really has been a great year. It's been a challenging year to play, but a great year in the market. Thanks for what we have. And I have to say goodbye, go blue. We'll see you next week.